Hi everyone, today I'm going to talk about the anti-aging industry snapshot in November 2025. The anti-aging industry have been expanded from cosmetic to medical aesthetic, biotech, and data-driven longevity. The aging demographic normalization of the minimal invasive cares, and also the fast science have created a durable and multi-year demand. There are several industry trends. Firstly, the aging demographic have built a structural demand. Secondly, the normalization of people with medical aesthetic. For instance, there are about 38 million medical aesthetic procedures being performed globally in 2024, which means that people are having a higher acceptance and entry step to the higher acuity care. In addition, the new breakthroughs in genetic, epigenetic, and also the regenerative medicines and biomarkers are speeding up how fast we can have precise, personalized treatment. Furthermore, customer spending are shifting towards a clinical-graded and personalized regimens, meaning an improving access and adherence to the medical aesthetics. And lastly, the longevity investments has been rebounded in 2024, meaning that the investors are being more confident about the platform biotech's tools and services. Let's start with the market segments. I've divided it into the biotech and non-biotech parts. Starting with the biotech, we have the medical aesthetic, including toxins and fillers. It is having about 22 to 28 billion in 2024 globally, and it's estimated to increase to 28 to 56 billion in 2033. The second part is the therapeutic and longevity biotech, which includes the RX books and cells and genes. It is having about 5.68 billion in 2024 globally, and it is estimated to increase to 34 billion in 2035. The last part of the biotech is the diagnostic and biomarkers. In 2024, it is having about 1.3 billion, and it is going to increase to 3.6 billion in 2030. So moving on to the non-biotech, we have the consumer products, which includes retinoids, antioxidants, peptides, and dermocosmetics. In 2024, it is having about 52 billion, and it's estimated to increase to 80 billion in 2030. This is the largest part of the market. The last part is supplement and NAD+. In 2024, it is having about 0.25 billion, and it is estimated to increase to 0.88 billion in 2034. Zooming to the medical aesthetic, for the modalities, we have the injectables with 2 toxin lengths, standard BONT with 3 to 4 months durabilities, and long-acting toxins like Dexify with a 24-week median. Fillers are being split into HA for instant shaping, and biostimulators with that drives collagen for about 12 to 24 months of effect. Medical aesthetic have 3 edges. Firstly, the duration. Long-acting toxins win because patients need fewer injections a year, which supports for higher prices as long as the injectors adopt and understand how to use them. Secondly, the combo plays. For instance, HAs can provide instant shapes, while the biostimulators can build a long-term quality. So together they can build a higher ticket size and a more repeat visits. Thirdly, the coverage. Brands with broader SKUs and more anatomic size coverage can capture more of the injection shares. This is an industry of a mixture of the mature cash flow and high growth margin, typically valued on the EV over sales. Diversified term names are also traded on core EBITDAs. Pipeline adders are probability adjusted, for instance on new areas, combo claims, and also durabilities. For the risk flag, we have the price competition, for instance, HAs, toxins, biosimilars. We have the AE headlines, operator dependency, which is on the training, and also the litigations. For the competitive landscape, we have AbbVie, Skelma, and Revance. Therefore, medical aesthetic is a cash engine of anti-aging today, values are being crawled by durabilities, breadths, and also the combos. Moving on to the longevity biotech, for modalities, we have senolytic and xenomorphic. We are seeing an early signals mostly from small trials. We have the mTORs and AMPK modulations, where human evidence are still mostly indirect and the TAME study is planning to clarify that. We have the immunogenesis, where clinical work is still early and there are no broad aging approval yet. For fibrosis and ECM remodelings, the progress are still remain on disease-specific rather than the general aging biologies. The partial epigenetic reprogramming are having a very strong preclinical data, thus first-in-human studies are expected soon. And lastly, the cells and gene therapies. Early programs are targeting on age-related disease. One thing to notice is the longevity biotech stage reality up to 2025. The majority studies are still in preclinicals, namely phase 2, meaning that there are limited or no commercial revenues. Values are being created through milestones, BD or licenses, not through product sales. Longevity biotech cash flows have been increasing over years. Life science checks have got bigger. In 2024, the deals are over $100 million, which is about 50% of the total life science deal values, comparing to less than 40% in 2023. The longevity funding have been rebounded. Reports have cited about $8.5 billion in 2024 longevity investments. Some of the representative companies for longevity biotech are Unity Biotechnologies, Life Bioscience, and Retro Biosciences. Moving on to the diagnostic and biomarkers. For biomarker modalities, we see 3 buckets. Firstly, the protein markers have the strongest clinical evidence today, especially for the inflammation and cardiometabolic risk. Secondly, DNA methylation clock, which predict for populational level disease and mortality risk, though individual changes are still tricky to value. Thirdly, the multi-omics and proteomics are now widely used for discoveries and longitudinal trials. The core business model splits into 2 groups. First, the assay and instruments model. These companies are mainly valued on EV over sales, with some margin driven by recurring consumables and service revenues from their install base. Second, the service labs operating under CLIA. Their value depends on throughput, prior coverage, and biopharma contract. Multiple today are hinged on 3 factors: install base, menu depth, and how platform is being used on clinical and biopharma settings. Key risks are payer skepticism without hard utility data, commoditization of methylation assays, increase in regulatory pressure as LTDs move toward IVDs, and pre-analytical variabilities affecting repeatabilities. Key players of this sector include Olink and Quanterix. Overall, the near-term cash flow sits in the protein panels and neuromarkers. Clocks are promising but need stricter ops to monetize longitudinal changes. Starting with the non-biotech side, on the consumer product side, the main actives are things like retinoids, vitamin C, niacinamides, peptides, and ceramides, with the daily broad-spectrum SPF as a foundation. These showed up across serums and creams, from physician dispense lines to retail and DTC cares. Retinoids have the strongest human evidence. RTC shows an increase of pro-collagen and epidermal thickness and reduced fine lines within about 8 to 24 weeks. In beauty, the big houses have high gross margin and very steady cash flow. They're usually valued on EV over sales or EV over EBIT, and they trade at a premium because of their brand portfolio, skills, and strong channel power. Right now, what really drives the multiples are channel mix, Amazon's and DTC's versus the legacy retail, plus pricing and evidence-backed claims that keeps ad performance strong and product return low. On the risk side, the key flags are claim enforced from FTCs, MOCRA documentation's gap with retailers, rising take rates and ad inflations on marketplace, rating volatilities, and the pace of recovery in China and travel retail. Some of the competitive landscapes include L'Oreal Groups, Estée Lauder, and Coty. In supplements, the main modalities are NAD plus precursors like NR and NMN, which multiple human RTCs and meta-analysis can show reliable rates in blood NAD plus over weeks or months. Across 2023 to 2025, trials constantly confirm an 80+ increase, while functional outcomes like sleeping, walking, or accrued brain NAD+ changes are still remain early and unpowered. From a positioning angle, brands lead with biomarker claims such as raise NAD+, avoiding to talk about disease or longevity claims. Ingestible brands usually care about 55 to 65 gross margin, but trade at a lower EV over sales than beauty health because they are smaller. Profitability scales quickly with Amazon's and DTC repeats. The multiples today is mainly driven by repeats and retention, units economic like CAC over LTV and take rates, and the Amazon DTC clinic channel plus the review momentum. Key risks include short and variable RTC evidence, heavy platform dependence, and sensitivity to rating and views. Some of the competitive landscape includes Chromadex and Elysium. Recent IPOs and demands include Crown Laboratories is taking Revance Privates to integrate Dexify and RHA US into a scaled aesthetic injectable platform. Archimed is acquiring JCs for roughly $742 million to take RF lasers ultrasound aesthetic device makers private and delisted in Korea. Galderma is completing a highly successful $12.6 billion CHF IPO, the strongest Swiss listing since 2017, driven by the broad investor demand. Last but not the least, the regulators across the world differ from countries to countries. In US, toxins are biological, fillers are high-risk device, and energy device need FDA clearance. Longevity biotech cannot claim aging, so trials target age-related disease. Most biomarkers tests run as clear LDTs, while marketed ones are IVDs. Cosmetic and supplement depends on claims and cannot make disease statements. In Europe, fillers and devices fall under MDRs, toxins are medicinal products, and diagnostic phase IVDR. Claim must be evidence-based. In Asia, China has restricted Class 3 rules for injectables and NMPA approval for devices. Cosmetics and supplements require claim fillings. Japan and Korea allow limited functional claims, but devices remain regulated. McLean Syndicate offers a comprehensive range of services and brings extensive sector experience. If we can be support, please don't hesitate to reach out. We'll be happy to discuss how we can help you to achieve your strategic goals. This is the end for the anti-aging industry snapshot. Thank you so much for listening.